Are you thinking of buying your first home in the state of Minnesota in Washington County, just east of the Twin Cities? You know, that cities like Woodbury, Stillwater, Lake Elmo, Forest Lake, Cottage Grove, and more. And if you're a first time buyer looking for down payment assistance, you've come to the right place. We're going to talk about down payment assistance in Washington County, Minnesota. I'm Peter Lindquist. I've been a mortgage lender for over 30 years in Minnesota. I do an awful lot of work with first-time home buyers and down payment assistance programs. Thanks for joining me today. You know, if you like today's video, please give it a thumbs up. You know, it's free for you to do, and it means a lot to me, so please do it. And certainly feel free to leave comments below and consider subscribing to the channel. Talk a lot about home buyers in Minnesota. You know, in Washington County, there's actually at least 5 active programs. There's a couple others that are either low on funds or haven't had funds in a while, so we're going to focus on the main 5. 3 of them come from the state of Minnesota, Minnesota Housing Finance Agency. We're going to spend some time talking about how those can help you in Washington County. And then there's a couple local programs too. One from Washington County for first generation buyers, and the city of Woodbury has a down payment assistance program as well in Washington County. Let's start with Minnesota Housing Finance Agency down payment assistance programs for you. So available through MHFA, Minnesota Housing Finance Agency, there's 3 programs. 2 of them are $14,000 and one of them is $18,000. Let's focus first on one of them that's $14,000. This is one that a lot of people qualify for. It's gotten more difficult in 2025, but let's talk it through. So it's called the Deferred Payment Loan, not to be confused with the Deferred Payment Loan Plus, which is the one that's at $18,000. People like the Deferred Payment Loan because it's 0% interest and 0 monthly payments. So it really is great as down payment assistance because it takes up $14,000 of what you owe, and you're not going to have a monthly payment on it. You only pay it off when you sell the house, refinance it, or if you vacate the house and rent it out. Under those 3 circumstances, you've got to pay it off. Now, there are some program parameters to it that we've got to pay attention to. Let's start with the maximum income levels. If you've been learning about down payment assistance, you know that almost all programs have maximum income limits. And I'm going to put them up on the screen here, but for 1 to 2 people, it's $85,000 in the household. For the spouses, cannot earn more than $85,000. If there's 3 people in the household, then it's $95,000, and then it keeps on going up from there all the way up to 9 or more people. And once you get up to that level, it's about $146,000. So there's a maximum income level that we've got to pay attention to. Then there's also a maximum asset level. You can't have more than $13,000 left over. So here's what I mean by that. Let's say that you have $50,000 in the bank, and with the down payment assistance, you'll only need $5,000 to buy the home. You would have $45,000 left over. Well, this program is needs-based, and MHFA does not allow you to do that, so you wouldn't qualify for the program. But if you have $10,000 in the bank and you need $6,000 to buy the home after using the down payment assistance, now you've only got $4,000 left. That fits the program parameters. Now, one of them that is new for this year is that it has to be meaningful in terms of helping you on your monthly payment. So there's actually a minimum monthly payment that the house has to have for you to qualify for this, and that is 28% of your gross income. Let's assume that your gross income, for example, is $7,000 a month. That's like $84,000 for the year. Your monthly payment has to be more than 28% of that. So 28% of $7,000 is $1,960. That's including taxes and insurance. So it's not hard to hit that, especially in Washington County. But your monthly payment has to be more than that in order for you to qualify for this money. And then a couple of other basic parameters. You have to be a first-time home buyer. Well, at least one of the buyers on the loan has to be a first-time home buyer. It doesn't have separate minimum credit score requirements, but with MHFA, they have minimum credit scores 640 on conventional and 650 on government loans, FHA, VA, and USDA. This does require homebuyer education, and a unique aspect of this program is that it allows for non-occupant co-signers, so parents can co-sign with their child, for example, and we're not counting their income in the maximum income levels. That's actually a very useful feature for buyers that don't otherwise qualify. So related to that program is the Deferred Payment Loan Plus. That one goes up to $18,000, and it's great to have when you can, but it's a little tricky to qualify. You have to hit 2 of 4 extra criteria. So number 1, have to have a household of at least 4 people or more. So anything less than that does not check off that box. Or if somebody in the household has a disability, that would check off that box. If one of the buyers is a first-generation home buyer, so a first-generation home buyer gets a little tricky. It means that you can't have owned any home. Your parents can't have owned any home in any country unless there was a foreclosure. They're pretty serious about documenting that, so it gets a little bit tricky. And then another one is if you're sole head of household, not by IRS standards, but if you've got at least one dependent in the household under the age of 18, or a household with a disability, or somebody that's 62 years or older. We got to talk that one through because it gets a little sticky in terms of how to fit that in. So at least 2 out of those 4 you have to hit in order to qualify for that program. Then the next program is called the Monthly Payment Loan, and that one goes up to $14,000 also. It's less popular because it has a repayment feature. You have to pay it off over a 10-year time frame, so that adds to your monthly payment. But it is $14,000, and it reduces the amount of money that you've got to bring to closing. With that program, there's no maximum asset level. You don't even have to be a first-time home buyer. You know, you can use one of their program called Step Up if you don't meet the terms of first-time home buyer and still get down payment assistance. Just that you're going to have to pay it back. It's at the same interest rate as what the first mortgage is. Now that one has maximum income limits of $139,000 for 2 people, and for 3 or more people, $159,900. I want to just caution you on the calculating income. Both of these programs, deferred payment loan and monthly payment loan, calculating the income isn't always logical. It's not the way you might be thinking of it at home. You'll want us as a loan officer to calculate it for you because there's a lot of ins and outs about how they end up calculating your income to qualify, and it's gross income, the income before tax. Okay, so that is MHFA. Minnesota Housing Finance Agency. Earlier this year, they had a first-generation program, but that is gone. Now, Woodbury has a program. So if you're looking at Woodbury, Minnesota in Washington County, they've got a program that goes up to 3.5% of the purchase price. So on a $400,000 home, that's $14,000. That one you repay with an interest rate. So it's presently 3% as simple interest, which means that you're paying interest only. So It's a really low payment that you're adding, and really you use this to help you reduce what your mortgage insurance costs are, and it helps reduce your monthly payment as well. That one has a maximum income limit of 158,000, so a lot of people can qualify based on that. And the max purchase price is $451,500, so it's pretty liberal from that standpoint. If you're a first generation buyer, you get that money lent to you at 0% interest. Then finally, Washington County has a $5,000 grant for home buyers who are first generation home buyer. You've got to be getting a loan that is compatible with that program, largely MHFA programs like the Deferred Payment Loan Plus. In order to qualify for this program. But it's a $5,000 grant, so if we're qualifying for one program, we may want to add that too, because all of these programs are stackable. That means you can combine them and add them together. So if you're buying in Woodbury, for example, you could get MHFA, Woodbury, plus the grant if you're a first generation home buyer. So it adds up to a significant amount of money. All right, I hope this has been helpful to you. Navigating through this, every time I do one of these videos, I think, how can I explain this and make sense of it? Because it does get tricky. Navigating through it is not easy. I applaud you for doing some research ahead of time, but feel free to reach out to me. I would love to help you. In order to qualify for these programs, or in order to access these programs, you need to get a loan through the lender that is doing your first mortgage. You can't get these as standalone programs. I had somebody just yesterday texting me that question, and I try to mention on every video, if you're interested in this, feel free to reach out, but understand I would need to help you. It's great if you can be in a planning stage and you're thinking a year down the road or 2 years. I'm glad to help you with that. All of these programs are subject to change without notice, and certainly the funds are not always available. Minnesota Housing, those funds are always available. But once we talk about community programs, those funds kind of come and go. All right. Thanks again for taking the time to be with me today. My name's Peter Lindquist. I would love to be able to help you out if you're interested. We